Palantir just posted 93% revenue growth, raised guidance across every single metric it reports, and the stock, which had fallen after every one of its last four earnings beats, ripped 10% after hours anyway. Good morning, it's Tuesday, August 4th. I'm Mick Vertucci with Eleanor Whitfield and Marcus Brooks. No fourth chair again today. The Dow closed at a record last night. Oil fell off a cliff. The 30-year hit a level it hasn't seen since 2007, and by tonight, AMD reports. Big morning. Eleanor, start us off?
Morning, Nick. And I'll say up front, a lot of what happened yesterday is genuinely good news. I'm just not sure all of it survives past this week.
Morning. I'll take the other side of that in about 10 minutes, but first, board business.
Board business. Eleanor, you had a call on this morning's ISM print yesterday and it's already resolved.
It is, and I want to be straight about it. I said a bad fence. Below 56 on new orders, I said the 10-year dips on the print. Above 57, it holds or ticks up regardless of oil. New orders printed 56.7.
Right in the gap you left yourself.
Right in the gap. But if we're being honest instead of technical about it, that's a strong number. The whole ISM headline blew past consensus. 55.6 against 54, the best read since May of 2022. By any real standard, that's the holds or ticks up case. The 10-year eased anyway, down about 5 basis points, mostly on the Iran headlines. So strip out the technicality. I called the direction wrong.
Loss.
7-7 now, and that's a second one in a row.
Marcus, yours was cleaner.
Yeah, I'm not going to pretend this one was close. I said if the low end of Palantir's new guidance implied anything above 75% growth, the stock's green by this morning. They didn't guide to 75. They guided U.S. commercial growth to at least 134%, up from 120. Full-year revenue guide jumped from around $7.65 billion to $8.15, well clear of where the street was sitting.
That's not a guidance beat, that's a guidance re-rate.
It is. Win. 8 and 9 now, 3 in a row.
Eleanor's 7-7 on a 2-game skid. Marcus's 8 and 9 on a 3-game streak. Sarah and Dave are still sitting quiet with no live call to score this morning. On to the actual tape. The close first. Eleanor, walk me through it.
Broad and fast. S&P up 1.48% to 7,650. Sorry, 7,600.50. Nasdaq up 2.13% to 25,914. The Dow added 1.32% to close at a record 53,178. And it wasn't just the mega caps. Russell 2000 up 1.73% right alongside them. The VIX dropped almost 2.5% to 15.61.
A whole market moving together on one headline. That's the story more than any single stock. This wasn't tech carrying dead weight, everything participated.
What's the headline?
Oil. Trump said he called off a planned strike on Iran to pursue talks on reopening the Strait of Hormuz instead, and crude cratered, WTI down close to 7% to the high 70s, Brent off a similar amount near 83. That pulled a real chunk of the inflation risk premium out of the market in one session, and equities ran with it. Layer in ISM, smashing, consensus on top of that, and you get exactly the kind of day we just saw.
Marcus, anything in the internals you'd flag before we move on?
Semis didn't get the memo. SOX fell almost 2%. Micron, Broadcom both pulled back, even as literally everything else in tech ripped. And Amazon crossed $3 trillion in market cap intraday. 5th company ever to do it.
Which club is that now exactly?
Apple, Microsoft, Nvidia, Alphabet, and now Amazon. It stopped being an exclusive club around company number 3, honestly.
Still, $3 trillion on ASA-US growth and retail margin expansion, not a story about a chip. That's a different kind of $3 trillion than Nvidia's.
Any other movers worth flagging before we leave the close?
Microsoft, up 2.3% to $487.77, continued big tech leadership. Nothing dramatic, just steady. The one I'd actually call out is Alibaba. It extended its breakout after unveiling a new model, Qwen 3.8 Max, which the company says delivers top-tier performance. Stock's now roughly 39% off its June low.
That's a real move for a name most of this desk had written off 6 weeks ago. Worth watching whether that's a one model pop or the start of Alibaba actually getting credit for its AI stack again.
Fair distinction. All right. Oil, since it did the actual work yesterday. Eleanor, you were skeptical of this exact move 24 hours ago.
I was, and I want to be fair to what actually happened. The drop held. It's not a headline that faded by lunch. WTI sitting in the high 70s this morning too. Reuters and CNBC both have crude under 85, down more than 5% on the week on the same bet the war's cooling. That's a real move, not just a Monday spike.
Which is what I said yesterday. De-escalation doesn't announce itself with a signed treaty. It starts with talks, the risk premium bleeds out, and if it holds, it keeps bleeding. That's exactly what happened.
I'll give you that one. Where I still hold the line, CNBC had a piece out yesterday making basically my point from a different angle. Investors who rode the Iran oil trade higher all summer are finding the stay-long case gets trickier from here because the easy money was in the spike, not in calling the exact week it unwinds. If today's talks stall even slightly, you get a violent round trip, and energy positioning is still crowded on the long side going into that risk.
Sure, but crowded long unwinding is a trade risk, not a thesis risk. I still think tanker data is the tell, same as I said Monday, and I haven't seen anything yet saying it's turning back the other way.
So call it a partial win for Marcus, with Eleanor's asterisk still very much live.
Fair characterization.
Now, the piece of yesterday that oil's crash almost buried. Eleanor, the 30-year.
This is the one I actually want people to sit with. While the 10-year eased to about 470 on the Iran relief, the 30-year hit 521, 523 depending on the source, a 19-year high, the highest since 2007. That's not an Iran number. That's not even really a today number. It's the long end telling you it doesn't believe the inflation fight is over, even while the short end is having a completely different, calmer conversation.
Here's where I think you're overreading it. Long yields have been climbing for weeks on pure supply and term premium mechanics. The Treasury is issuing an enormous amount of long paper, and investors want more compensation to hold duration in that environment. That's a market structure story. It doesn't mean the market thinks inflation's about to rip.
I'd push back. It's not just supply. You had 3 sitting Fed presidents publicly vote for a hike 5 days before this move. Warsh stood at that podium and said there's no soft target, only 2%. When the people setting policy are telling you inflation risk isn't closed, and the bond market that has to live with that policy for 30 years reprices to a 2-decade high the same week, that's not a technical footnote, Marcus. That's the bond market handing the Fed a report card, and the grade isn't good. September hike odds in the futures market are north of 60% now, up from about 50 a month ago. That's the front end starting to believe the dissents, too.
Give me a level, not just a vibe, though. What actually changes your mind here?
If the 30-year backs off 520 and just sits there through the jobs report, I'll admit this was mostly an August supply story. It's the combination of a new high and it holding that worries me, not one print.
I think you're stacking 2 separate stories to make one scarier one. Term premium and Fed credibility are related, sure, but the 30-year isn't the number that moves stock multiples day to day. The 10-year is, and the 10-year sitting fine, easing even, right through all of this.
Today, it's fine today. My worry is what happens if the long end keeps climbing and starts pulling the 10-year up with it regardless of what oil or the Fed's short-term signaling does. That's when it stops being a bond market story and starts repricing every growth stock we talked about crossing $3 trillion a minute ago.
I'm not going to force a bow on this one because I don't think there is one yet. So here's the tiebreak for anyone listening. Watch whether the 10-year decouples from the 30-year this week. If the 10-year keeps drifting toward 480, 490, even as oil stays calm, Eleanor's right, the long end's dragging everything with it. If the 10-year holds under 470 while the 30-year keeps climbing on its own, Marcus's supply story is the better read.
I can live with that test.
Same.
Quick explainer for anyone who just heard term premium and glazed over. It's the extra yield investors demand to hold a longer bond instead of just rolling short-term ones, to compensate for the risk that inflation or rates surprise them over a much longer stretch. When it rises, it usually means the market wants more insurance against being wrong for 30 years. Not that anything's about to break tomorrow.
That's exactly it.
On to the single name stuff. Palantir first, since the board already made us cover the headline number. Marcus, give me the print itself.
Revenue of $1.94 billion against a street estimate of $1.8. Adjusted earnings 41 cents versus 35 expected. But the number that actually matters is U.S. commercial revenue, up 149% year over year. Total revenue growth 93%. This is not a government contract story anymore and hasn't been for a while, but last night's print makes that impossible to argue with.
And the guidance raise is what makes it more than a good quarter. Full-year revenue guide moved to $8.15 to $8.16 billion. Adjusted free cash flow guidance up to $4.5 to $4.7 billion. Every single line moved up, not just the headline.
Stock reaction?
Plus 10% after hours, back above 140. And remember, this stock was down about 40% from its highs walking into the print, so the market had already done real work discounting expectations before a number even printed. That's part of why the reaction was this clean.
I'll say what I said Sunday still holds directionally. It's expensive by any normal yardstick even after last night. But expensive and delivering is a very different stock than expensive and hoping, and last night moved Palantir from column 2 to column 1, at least for now.
Snap also popped after hours.
10.5%. Narrower loss than expected, revenue past estimates, and ad revenue reaccelerating to 9% growth with EBITDA up something like six-fold from a year ago. Sterling Infrastructure and Vertex Pharma both beat and raised too. Quieter prints, but the same theme all night, real numbers behind the guidance, not just AI buzzwords.
Which is actually the useful signal across all four of last night's reports. The market's getting more selective inside the AI trade, not less enthusiastic. It wants growth it can see in the metrics, and it's still willing to pay up when it gets it.
Sterling and Vertex got a lot less attention than Palantir and Snap. Anything under the radar there worth a beat?
Sterling's the one I'd actually flag for anyone who isn't watching it. Revenue up 90% year over year, EPS of $5.80 against a street estimate of $5.01, and they raised full-year guidance again. That's an infrastructure name riding the same CapEx wave as the chip names, just without the multiple because nobody's paying attention.
Vertex was steadier, low teens revenue growth, guidance nudged slightly above consensus. Not exciting, but boring and beats is a perfectly good place to own something in a market this jumpy.
Different beat entirely. AstraZeneca and Bristol Myers.
The Financial Times reported preliminary merger talks that could value a combined company near $400 billion, the largest pharma deal ever, if it happens. AstraZeneca fell as much as 7% in London. Bristol Myers rose about 6% here.
Which is the tell right there. You almost never see the target and the acquirer split that hard in opposite directions. The market's saying this helps Bristol Myers a lot and helps AstraZeneca not at all.
Because it doesn't, structurally. AstraZeneca doesn't have a patent cliff problem. Bristol Myers does. Eliquis and Optivo both facing exclusivity losses in the next couple years. Jefferies called the report perplexing, given how strong AstraZeneca's own pipeline already is. Citi used the word surprise.
I actually think that reaction is a little harsh on the logic, even if it's right on the price. Bristol Myers gets a clean exit from the patent cliff overhang the market's punished it for all year, and a combined oncology book that's genuinely hard for anyone else to match. The overlap between Optivo and AstraZeneca's Imfinzi is a real antitrust headache, though that's the piece I'd actually worry kills this before price does.
Neither company's even confirmed the talks yet. This could be gone by Friday.
Which is probably exactly where we should leave it. Now, this morning, since there's a lot of it. Marcus, futures.
Green again, but modestly. S&P futures up about 0.2%. Dow futures near 53,400. Nasdaq futures up around 0.75%. Nothing like yesterday's move, which makes sense. Yesterday was the surprise. Today's just people confirming they still believe it.
What's actually on the calendar?
Caterpillar and McDonald's both report before the bell. Caterpillar's the one I actually care about. Real backlog, real global industrial demand, not a story about a chip roadmap. If that prints soft while everything else looks this strong, that's worth noticing. Factory orders and trade balance data are also due this morning.
I'd flag McDonald's the same way we've been flagging it all year. Same-store sales tell you whether lower-income households are still trading down, or whether that's finally leveling off. It's not the headline of the day, but it's the print that either backs up or undercuts everything else we just spent 20 minutes on.
Agreed. A confirming data point, not a headline one. But we're 3 days from Jobs Friday, and every one of these prints is one more data point stacking toward that answer.
And then tonight's the one I already put my name on Sunday, AMD after the close. They guided to $11.2 billion, give or take $300 million, 46% growth year over year. The number underneath that I actually want is data center revenue. Quarter over quarter, AMD already had a record 46% server share last quarter. If that keeps climbing, the Helios and Imifewer 150 story is real demand, not a roadmap slide.
I'd watch the margin line just as hard as the grow rate. Consensus has full-year gross margin near 56%, up from 52% last year. But their own CFOs already flagged that the early Instinct systems and the Helios ramp pressure margins in the near term. A strong revenue beat with a margin miss is a very different stock reaction than a clean beat on both.
That's fair, and it's genuinely the number I'm least certain about tonight.
We'll have that by tomorrow's show, and it's worth saying. Friday's jobs report is now 3 days away, not 5, so everything we're doing this week is building toward that one print, deciding who was right about the Fed. One quick human moment before we close it out. Marcus, you've apparently been keeping a tally.
I have. Amazon joining the 3 trillion club means I now owe the team a coffee for every $1 trillion company we talk about crossing a new threshold this year. I'm 2 coffees in the hole already.
I'll take mine black, and I'm collecting.
Noted and enforced. Back to it. Closing calls, checkable by tomorrow morning. Eleanor first.
Mine's on the 10-year. If it closes today above 472, I think the long ends pull that Marcus and I were just arguing about is already starting to win, oil calm or not. If it holds at or under 470, the Iran relief is still doing the work, and my worry waits another day.
Marcus?
Mine's on AMD tonight. If data center revenue growth accelerates quarter over quarter from last quarter's pace, I think the stock's green by tomorrow's open regardless of the margin number Eleanor's worried about. The growth story wins the headline reaction. If data center growth decelerates even slightly, I think the margin worry takes over the narrative and it's red no matter how the top line looks.
10-year at 472 and AMD's data center growth rate, both landing before we're back here tomorrow. Here's the morning in one breath. A record close built on a falling Iran risk premium and a hot ESM print. Oil actually holding its crater a day later. A 30-year yield at levels we haven't seen since before the financial crisis. Palantir and Snap both proving the AI trade still pays for real growth. A $400 billion pharma deal. Nobody's confirmed yet. And AMD all landing before we're back tomorrow morning. If the show's useful to you, follow Nova Ventures Daily wherever you get your podcasts and catch our live takes all day at Nova Ventures CEO on X. That's your Tuesday morning brief. Have a great day, and we'll see you tomorrow.